Today we're looking at what the decision to shut down LIV Golf says about Saudi Arabia's broader approach to sports and influence.
In late 2022, the Saudi Sovereign Wealth Fund, the Public Investment Fund or PIF, launched a rival golf circuit, throwing hefty money at top stars and promising bigger paychecks than the PGA Tour could offer. The move was meant to cement Riyadh's status on the global stage, but it turned out to be a costly experiment. The PIF, which manages well over $900 billion in assets, is run by Governor Yasser Al-Roman, a serious golfer who was deeply involved in designing the LIV brand. He and his team hoped a high-profile circuit would secure lucrative TV rights, sponsorships, and even a partnership with the PGA, something the Saudi leadership believed would accelerate the kingdom's image makeover.
Instead, the circuit struggled to secure those essential broadcast deals. While LIV did luring marquee names such as Sergio Garcia and Phil Mickelson, it never turned a TV contract. In 2024 alone, the non-U.S.
side of the competition reported nearly $600 million in losses, a stark contrast to the lofty earnings promised to its players. Compounding the issue, Saudi Arabia has been grappling with a multi-billion-dollar budget deficit and has taken on debt to finance its megaprojects rather than fund them with liquid, unmanaged. The PIF's recent announcement that it will slow down several of its flagship initiatives, NEOM, the 2030 World Expo, and the 2034 Men's Soccer World Cup, signals a shift from the kingdom's earlier aggressive spending spree.
The decision to pull the plug on LIV Golf is therefore not just about a failing sports circuit, it is a broader recalibration.
Riyadh appears to be learning that money, however deep a bottomless pot, is subject to market realities. The move may prompt Western investors and fund managers who are hoping to align themselves with Saudi generosity to rethink their engagement strategies.
It also casts doubt on other high-profile Saudi-funded events, like the flag football spectacle headed by Tom Brady and Michael Rubin.
Moreover, the withdrawal underscored that regional political calculations play a role in how the kingdom spends. Even as oil prices have risen thanks to the war in the Middle East, the PIF has reportedly leveraged its position to urge the United States to lift its blockade on Iranian ports, a move that reflects a blend of economic and geopolitical priorities. In sum, the LIV Golf debacle is a cautionary tale about the limits of sporting diplomacy when it is backed by 155 large sums without matching revenue streams.
It also shows Riyadh is tightening its purse strings and moving toward a more disciplined, long-term approach to gaining influence. That shift will affect how the kingdom's flush cash interacts with global entertainment, sports, and politics in the years ahead. That's all for today's episode. Stay tuned for more updates on global sports strategy and cross-border investments. Thanks for listening.